Welcome, welcome, welcome. What is going on, everybody? We are going live, talking about some subjects we need to study as business owners. All right. Okay. So let's go ahead and I'm gonna go ahead and get started here. I know people will be joining in. You're gonna be showing some love, throwing in some comments here. It looks like we may have already have. Good morning. Yep, we already got a Facebook user in the house. All right, guys. So today, what I want to discuss primarily is different things that we need to understand as business owners and what those subjects are that we need to study. Okay. Now we're not only going to be talking about the subjects that you need to study, we're going to deep dive into what are some of the different categories within those subjects. All right. And then where can you go and find those resources? All right. Good morning, my man, Robert, Nicole. Good morning. Good to see you guys. Always appreciate some support here, coming to learn. All right. So let's get right to it, guys. Let's get right to it. So the two subjects that everyone needs to study as business owners and entrepreneurs is going to be your quantitative impacts and your qualitative impacts. All right. Quantitative and qualitative. So let's talk about what that actually means. The quantitative aspects are the tangible things that can actually be measured. Okay. These are things that, let's think about sales. We can measure sales. We can see how much money's coming in. Or expenses, things of that nature, operating costs. We can measure those because there's an actual number tied to it. So those are going to be all of our quantitative. Now, our qualitative things are the intangibles, the things that we can't directly measure, right? Those are going to be things like, how do people like us, right? Whether that's people that that we work with or people that buy or products or our services. Okay. So what I'm going to do now is, as we talk about each one of these, I'm going to break down different sections of the quantitative and different sections of the qualitative, so you have a better idea of what you actually should study. And we're going to try to make this as fun as possible. I understand that when I say, hey, we got to study math, many people are like, the what? What? I'm not going back to high school. I'm not going back to college. I've been there, done that. But we're going to talk about the importance as a business owner, why we need to know that. All right. So let's kick it off with quantitative. Now, when we're thinking quantitative, we're thinking basic business math. All right. I'm not going to sit there and tell you guys, oh, Ruben says I made those words up. Come on, man. Quantitative and qualitative. I'm not going to lie to you, though. I had to practice saying them several times because I got tongue tied, but that doesn't matter. I didn't make them up. They're in the dictionary. All right. All right. So when we think of basic business math, we're not talking trigonometry. We're not talking calculus. We ain't doing none of that. What we're talking about, for example, is accounting. Now, when it comes to accounting, guys, I'm not telling you to go out there and be the best accountant in the world. Matter of fact, that's why we often hire CPAs and we often hire bookkeepers. Okay, and we want to keep them in the on the bench or on deck. We always want to have them there because as entrepreneurs, we may not necessarily have time to consistently make sure that the books are reconciled or up to date. Right. But we need that in order to operate at our maximum efficiency. How can we make decisions on anything we do in the business financially if we have no idea where our money is going? Now, believe me, guys, a ton of my clients where I'm working as either a fractional CFO or I'm helping them with their business operations and business structuring, about 90% or more have no idea how their finances are truly operating. Okay. Meaning they know that they're out there making money, like many of us will do, go make a commission or a wholesale assignment fee, whatever. They make the money and they see $30,000, for example, hit the bank account. Well, as soon as that $30,000 hits, immediately they're like, well, I got to pay for this. Oh, you know what? I've always wanted to buy this marketing platform. And I always wanted to buy this new thing for the family, or we're going on the trip because we got 30,000. But the question really should be, okay, well, how has my company performed up to this point? Do I have enough money to pay for all of these other expenses, or do I need to dump this money back into the business for X, Y, and Z? So let's think about accounting for a second, right? For accounting, What does accounting actually measure? If anybody knows, I want you guys to put it in the chat there. And I'll give you a hint. It's past, present, or future. That's the hint. But I won't have you waiting too long, guys. Accounting measures the past performance. And some can argue the present, right, through a balance sheet or something of that nature. But in order for it to represent the present, the books have to be reconciled and up to date. Oftentimes, what's going to happen is, yep, Nicole got it right there, past, right? Oftentimes, what happens is we'll finish the month. Let's look. It's November now, the time of this recording. That means October has just finished. If you had to guess, would you think that most business owners have their books from October fully reconciled and up to date as of the 2nd of November? Probably not, right? Because we have to go back, we have to check the receipts, we have to make sure all the accounts were closed out. If there's credit card statements or something from the last month that won't reflect until the 15th or the 10th of this month, it takes time, right? So that's why it's arguably, or that's why the statement is saying that accounting covers the past and it can rarely focus on the present because it's rarely ever up to date at the day that you're actually operating, right? So understand that. So because it's for past performance, we need to know, how have we actually been performing as a company? Okay, so that's accounting. So the first one I want you guys to study under the quantitative, see how I pronounce that right there? Just practice it all. Under the quantitative section is accounting. Now I'm going to give you guys a resource for accounting. Accounting doesn't have to be extremely intensive and not fun. There's actually a great book out there called Accounting for the Number Phobic. All right. And it was written by Don Fotopoulos. If anybody knows that if I pronounce that wrong, please let me know, but that's how it's spelled, okay? But the book is great. It's easy to read and easy to digest, and it gives you the basic principles of accounting. Again, you're not the accountant. You don't even have to be the bookkeeper, but you need to know how to have those conversations with those individuals, right? So they're not pulling the wool over your eyes, or you can sniff out some BS if they're trying to tell you, oh yeah, this is done, this is done. Come on, man. Whip open that book and be like, see here in chapter 7, it says this. Right. So that would be a great resource for every single business owner to read, just to get the basic understandings of accounting. Right. And again, it's written in a way that it's easily digestible. All right. So the next thing, if after accounting, the next thing is business finance. See, Ruben's telling me I'm killing it with the names. I am. I'm killing it, man. I've been practicing. All right. The next thing is business finance. So let me ask you guys, if accounting covers the past, then business finance covers what? And as I take a break, I'm gonna sip a little water here and see if anybody pops it up. Jeopardy music, right? So if accounting covers the past, business finance covers the future. All right. So what we're looking at is we can analyze where we've been and then attempt to use that data to project the future. When we're looking at finance studies, it's teaching us how to run that financial analysis to identify projections. It gives us the ability to say, hey, what is the strategic direction of the company? Here's a great example here. Okay. So let's say we've seen that we've spent $10,000 in marketing in the previous year. Okay. Now, if we're doing it right, which this is a whole nother conversation, but if you are not tracking your marketing, you are failing yourself. Okay. You are failing yourself. What I mean by that is one specific piece of marketing only reaches a certain number of people, right? Even if it's on social media, even if it's direct mail, so it doesn't matter. You need to track how many people did it actually reach. Okay. Out of all the people that it reached, how many people actually decided to click on it or call you? And then out of all the people that called you, how many did you actually get to close? You have to track each individual marketing campaign. So if you do direct mailing, that's one. If you do Facebook ads, that's two. And you have to track them all. Because if you go out and spend that $10,000 by tracking it, now we can say that $10,000 gave us a certain amount of income. All right. So now we can compare it using the financial ratios to say, all right, our return on our investment for marketing was this amount. Only when we can do that historically can we then say, all right, so next year, if we want to create this much in revenue, using the data that we collected here, saying, okay, how many people we reached, how many people actually bought something from us so that we sold. Now we can say this is how much we need to spend in marketing in order to get this type of income. But we can't do that unless we have the data. So accounting is needed for the past, right? Tracking all those operational procedures, those KPIs and stuff like that. And then we're going to take that information to help us influence the finance studies for the projection. Okay. Our return on investment, return of investment, and all those things. And if you guys ever got any questions, please just put them in the chat here. I know I'm going fairly fast, but overall, I want to make sure that you understand the key areas that you need to study and get these resources as well, right? So a resource for finance is very simple, guys. It is Investopedia. That's it. If you want to study more about finance and become familiar with financial terms and terminology, Investopedia is a free website. It's a free resource. You can go in there and you can type in any financial term that you want, and it'll start and it'll populate a description, even have some examples with it. Okay. So I highly recommend that you just use that when you're ready to study, or if there's something that comes up in finance, go to investopedia.com. All right. Now, we got through the basic math of accounting and finance. Now, the next business math is economics. How many people love economics? See your hand nice and high. I don't see any hands. Yeah, most people don't really love economics, right? And that's fine. But oftentimes they don't really love it because they don't understand it. When we go and study economics in college, a lot of times it's just a lot of numbers thrown our way, statistics, and we're just like, yo, what does this even mean and why do we care? Oh, Ruben loves it, right? Or maybe that's a salute saying, hell no. I can't really tell. But a lot of times we don't enjoy it because we don't understand it. But I'm going to break it down for you. So there's two real categories of economics. You have micro economics and you have macro economics. Okay. So microeconomics is the decisions that individuals and companies are going to make to allocate their resources, production, their consumption, their pricing for their product or their service. And it's all around one single market or interaction with different markets that's similar to theirs. That's microeconomics. So let me give you an example. Most of us here are in some form of real estate. We own a real estate company, whether we are brokers and sales representatives, or if we're investors, wholesalers, flippers, buy and hold, doesn't matter. So when we're looking at it, we're looking at how are we pricing our product or our service? How are we dealing with the sales and the flow of the real estate market? And then when we're looking at different industries or different areas of the industry market, we may be in sales as a broker. However, we want to know what the wholesalers are doing. Why? Because the wholesalers are generating leads for off-market deals all the time. So we're studying them to figure out how to be better brokers and generate more leads. We want to study flippers. Why? Because flippers are the ones that are crafting these products to be put on the open market for our potential buyers, right? And if we work with the sell or with the flippers, we may be able to represent the sell too. But we want to know, how are the flippers thinking? Where are they getting their data to say, hey, this is what the market wants? So we're constantly studying, but you can see how that's a micro economy that's really evolved around one type of niche industry and your specific service or product. Okay, that's microeconomics. Now, on the other side, macroeconomics, that's the world. All right, that is, think big, right? Best example I can give is, how does the US dollar impact the various countries' currencies? Right. And now that's a whole nother topic for a whole nother day, but you may have heard somewhere in the news at some point in your life, like, hey, the US dollar has now lost this much value, which impacts the, the Honduran peso. And I apologize if Honduras does not use pesos, guys. I'm sorry, but I was just trying to use that as an example. I'm not exactly sure what Honduras uses, but nonetheless, right. You may have heard that narrative before. And that's the idea of macroeconomics. That's on a global scale. What are some of the big things that are going on in the world, and how is it impacting across industries, across countries, so forth and so on. So when we study these two things as business owners, we need to know microeconomics. That's what we need to know. Especially put it like that. Put a hyphen or an extra focus on microeconomics, because that is honestly how we live and breathe as entrepreneurs. We need to know our industry, right? The only way that we can stay competitive is by knowing our industry, knowing what our competitors are doing, right? So that's microeconomics. However, studying a general sense of macroeconomics is always good and it's always healthy. Why? Because now you can potentially see what's happening in the world. And by no means am I saying that you're going to be able to predict everything, because even some of these PhDs from Ivy League schools that study economics can't predict what's going to happen in the world. But if you have a general idea of what is happening, and maybe you catch wind of something that's going to impact us here in the States, most of our audience is here in the States or wherever you're located, well, then maybe you can start to implement things in your business now to hedge against that, right? Or to buffer against it. For example, if we ever heard that Bitcoin was going to become the new world currency, for example, well, then immediately we know if that's the new world currency, we should probably learn in our business how to accept Bitcoin as payment. You see what I'm saying? So that's just a brief example as to why you should still keep a pulse on macro. But for everybody here, I want to encourage you to study microeconomics. Now, where do we study economics in general? Two books. The first book is Freakonomics. Many of you may have heard that. It is renowned as one of the better books on just different outlook on economics in general. So Freakonomics. All right. Now the second book is called Wealth of Nations by Adam Smith. I'm going to share with you guys a little bit of insight. So the real estate team, my real estate team, 5 Pillars team, right? We have a book club, right? We have a book club that we do once every other month. We typically try to keep it local, but we open up the book and let everybody know what we're reading. This month's book club book is, oh man, I forgot the name of it, but it's called, man, I forgot the name. I'm horrible, but it was written by Naval Ramakant. See, I'm killing it with the names today, guys. But it was essentially a almanac, if you will, or a book of different insights from this individual. Very accomplished individual, owned several companies, extremely wealthy, sold a venture capitalist firm. He's all in, right? One of the things that he said very specifically is when you want knowledge, we have to understand the source of knowledge that we get. Even myself, I'll admit, what I'm sharing with you right now came from the greats. I've studied them. I've been taught by some of them, and worldly experience. Okay. But if it's just like rumors, right? You want to hear it from the horse's mouth, right? You want to hear it from the original person that kind of spoke it. So when we think about economics, we want to do the same thing. We want to go back to the original writer on economics. Yeah, Ruben said it perfectly. It's just like sitting on the shoulder of giants, right? So you can see where they've been from and where they're going, right? And then you don't have to pave that path yourself. So Wealth of Nations by Adam Smith was one of the first books written about economics in general, and it lays out a lot of the foundations of our modern economic structure. All right, so let me put it that way. So Wealth of Nations by Adam Smith, highly recommended. It is an older book, so it's going to read similar to Richest Man of Babylon and things of that nature, but it is a good book. Okay, now the final quantitative skill, guys. I know you're gonna love it. We just went from accounting, finance, economics, and now we're moving into business statistics. Ugh. I know immediately. How many of you felt the same way? Like you dreaded statistics if you ever had to take it, right? As soon as you heard statistics was on the schedule, your stomach just like dropped, right? Your booty got tight, you clenched up. You was like, oh, I feel sick, right? Anybody else ever feel that? So with statistics, I always felt that way because I always felt like the curriculum was coming so fast that I never got to actually digest it and understand it. I was literally just trying to stay afloat, keeping my head just like this above water, just trying to figure it out. I don't want any of us to ever go through that ever again. But I want us to also understand the importance of statistics and how we can make it relevant for us very specifically. Okay. So, statistics is just collecting and analyzing data. That's really all it is. Now, what is the data used for? It's going to be used for forecasting, maybe our sales projections, our revenue projections. Okay. So, we're going to want that. Also, it's used to identify patterns and trends. Let's think about that. We want to know, right? We want to be able to collect this data and know what's coming next. For example, this is the one I love most about trends here is remember Chuck Taylors were extremely popular way back in the day. And honestly, I don't even know what decade. It may have been the 70s, right? They were popular in the 70s. They became unpopular for a long time, and then they became popular again somewhere in the 2010s, right? So that is an example of a trend that may have died down and popped up. Now, imagine if you were doing custom design for Chuck Taylor, like that was your business, was custom design. And then all of a sudden you knew you had a head start knowing that Chucks were going to come back into style. And then you bought Chucks in bulk when they were still, because you remember they used to be cheap. They used to be like, I don't know, $15, maybe $20. Now they're all 50, 60. Imagine if you had bought a ton of them when they were still cheap and then started designing them prior to the trend really blowing up. You could have made a huge profit margin at that point in time, right? So it's always important for us to understand trends and things of that nature. And then also it's just translating all the data into useful information, right? Are our clients still buying, right? And all that good stuff. Now I want to see, okay, yeah, so we'll stick to that one a little bit later. All right. So, what's a good resource for statistics? I'm not trying to make you guys, what do you call it? Doctors, PhDs, and stats. I don't want you guys to be professors in stats. But you do want to have a good idea of what data you should want to collect and then how to kind of put it together. And if you don't put it together, then you can get somebody else to put it together, but you want to have a general idea of what you're trying to get out of it, right? And so LeVar put in a great book here. What do we got? Economists. Let's do that one, right? Economists. Thank you for that one, LeVar. I haven't read that book personally, but hey, let's pick it up. Let's read it. Because again, all of these different books and all of these different resources has information for us to use to become better at being a business owner, which that's exactly what all of us want to do, right? Now, as far as resources for statistics, I'm messing up on my words now. Business statistics for dummies. I'm not calling you a dummy. All right. But those for dummy books, I'm not going to lie, they speak to my soul. Okay. Because they're written so easy for us to understand. And I will, and many of you may already feel this, but I would say that one of the biggest struggles as business owners where we work directly with clients is our ability to explain information that's easily understood so they can make a quick decision, right? And so even on my end where I'm working directly with business owners and directly with investors on their business model, I still have to go back and study this stuff so I can become better at explaining it and make it easily understandable, right? So business books for dummies, man, they're killing it. Okay. Okay, appreciate it, Ruben. He got to spell it out phonetically for me. Okay, I don't need all of that, man. I don't need all that hate. No, I'm playing. All right, so that covers the quantitative side of it, guys. And just to recap on the 4 areas, it's accounting, finance, economics, and statistics, right? Those are the 4 pieces that I highly encourage you to study because every business owner definitely needs to understand a base foundation of them so that they can at least guide their bookkeeper, CPA, CFO, or whoever in the right direction of what they want to do and understand when those individuals are speaking back to them, what the hell they're talking about. Okay, now let's get to the qualitative. This is the intangibles here. All right, these things can't be directly measured. We're going to talk about a few different like workarounds of how you can measure them, right? But in essence, they cannot be directly measured, but they have a huge impact in how the company performs. Okay. And we're going to start off with the first one, which many of you may have already kind of predicted here, but it's your ability to manage. Awesome. He's got a meeting later. I love it. I love it. So this is going to be good. Maybe some of this content can be useful for you and you can bring this into the meeting. All right. I love it. So let's talk about your ability to manage here. All right. So when we're thinking of managing, let's just start with leadership. That's a really good baseline for many of us to start. When we're thinking about leadership in a company, we have to remember there was a beautiful saying, and Ruben, you may know this one. Nobody cares how much you know until they know how much you care. All right. Ruben, let me know if I got that one right or wrong, but I feel that that's correct. What they're saying is, hey, look, you can know the world. You got the best product, you got the best service and everything else. And I'm coming to work with you and I'm learning. But honestly, man, I don't care about you. I don't care about this company. I care about the paycheck and I care about what I'm learning so I can step off and do my own thing. Unless you actually show me as a leader that you care about me, my ultimate goals, and my family. Right? That's important to understand as a business owner. When we go out there, there's so many of my clients that will say, yeah, man, I'm hiring them. They're not performing. I'm ready to fire them. I'm going to boot them. I'm going to hire somebody else. And I'm like, all right, well, cool. How long did you spend onboarding and training them? About a week. Okay. All right, cool. How many family members do they have? Are they married? Do they have kids? They're like, I think, I don't know. Look, if you're not taking the time to really understand your people, then you can't pour into them and actually treat them the way they want to be treated. Here's another good one that I learned from a military leader of mine. He asked me, he was like, have you heard of the golden rule? Treat others how you want to be treated. And I'm like, yeah, that's perfect. He was like, do you think that's a good leadership style? I was like, yeah. I was young. I think I was like 20 at the time. I was like, yeah, that's a great way to do it. He was like, I challenge you to think of the platinum rule, which is treat others how they want to be treated. That changed my mentality on it completely. I remember after a deployment, we had a deployment. We came back and I had a buddy of mine, really good friend. He was on my team. His wife was pregnant. So Vince was my buddy's name. So me and Vince, we were talking about everything that he planned to do with the kid. It was like his third kid or his fourth kid. I can't really remember. And all he kept talking about, he was a family man. Man, I want to see my wife. I want to see my kids. I can't wait to get back home. So we get home, and while we're home, his wife has the baby. It's a beautiful thing, right? He's so happy. He's trying to get extra time off. Well, then all of a sudden, maybe a few weeks pass by, and our team leader at the time says, hey, look, you guys are some of our good performers. I want to send you guys out to a specialty school. It was actually mountain school, right? I want to send you out to a specialty school. When you come back, you're going to train up the team. Now, that specialty school took 4 or 5 weeks of training, somewhere around there. So we went out there and I was with Vince, and I remember all the conversations. Vince was saying, man, this is cool, but I just want to get it done so I can get back to my family. Just want to get it done so I can get back to my family. Boom, we complete it. We get back home. He's like, yes. Now, Vince made a grave error. He performed too well at the school. So well, in fact, that when he got back, the team leader awarded him with another school that's going to take him away from his family again. So after that, Vincent went ahead and did it, but now he was disgruntled, right? He didn't really want to work and do more military things. He wanted to be home with his family. And so now it makes me think back to leadership roles here. What may have been a better outcome was if the team leader looked down and said, all right, Vince, what do you want right now? You've been so good to this team. You've been so good as a performer. You provided so much value. What can we do for you to show our appreciation? What do you desire most? And by having that conversation, if he just said, hey, look, man, I just want half days for the next, 5-6 weeks. Well, hell, team leader could have signed off on that, no issues, and everybody would have been happy. You know what I mean? So understanding that as a leader, you have to understand your people. You have to understand your employees and your staff and your partners and your executive team, because if you don't, there's going to be a lot of different contrast of opinion, a lot of conflict. That's what I was looking for, a lot of conflict, right? And even Ruben says, so important. Absolutely. So understand those things, okay? In addition to that, all right, so a good resource for leadership. Let me just stop right there. So leadership is so important. A good resource for leadership is anything by Malcolm Gladwell. All right, anything by Malcolm Gladwell. He studied leadership for I don't maybe 40 years by now. I remember a long time ago when I was reading his books as a teen, he was like, I've been doing it for 20 years. So I'm sure it's been a minute now. But he has a ton of great resources on leadership. But the other piece of managerial skills that I want to focus on is customer or employee satisfaction. So it kind of runs in the same vein. You got to know your employees, you got to know your customers, right? But you want to gauge their satisfaction in the work environment. I mean, and everybody's going to be a little bit different, but some of the key factors are going to be how involved are they, or how much do they feel like they add value to the culture and to the community? How do they feel about the company culture and community, right? Do they feel like we're all on the same page, driving towards the same mission and things of that nature? So when it comes to satisfaction, we need to gather that information somehow. Now, remember, I said it can't be, these are not necessarily quantifiable, right? But there are ways that we can start to collect that data. And one of the best ways is do an employee satisfaction survey. That's it. Now, a lot of people don't like these, especially if you guys are in the military. You've run across some of these, or anybody in the corporate world. You've run across these satisfaction surveys, and you're like, "Yo, I'm just going to click through it," right? And that's fine. That's why it's not necessarily 100% accurate, and the data pool is only going to be as big as your company is. But nonetheless, we want to have that information. We want to have that information so we can start to make, so we can at least understand the impact that we have over our employees. Not saying that every single survey warrants a change, but we need to know that stuff as a business owner, right? We need to understand where our employees lie. And so Nicole says, if I was if I was Vince's wife, Christmas party would have been murder for the team lead. All I see Christmas party would have been, I see a knife. All right, I'm going to interpret that as you bought him a beautiful knife set. All right, we're not going to get you caught up with the law right now. And thankful for our military and their families. Absolutely, man. I love that guy. He's always in a positive mood, always a hard worker. And anybody else who has served here, we're going to thank you for your service as well. We love you all. All right. Managerial skills. So we talked about the managerial skills. The next qualitative. Oh, hold on. We got a question. We got a question coming in. Would you suggest the employer ask for the employee to put their name on the employee satisfaction survey? The answer would be no. Now, the reason why is because oftentimes there is fear associated with the employee survey, the fear of repercussion, right? If they put something, man, I'm not satisfied, and they name a manager or a leader in the company or somebody else in the company that hasn't been performing, and they give an example, the fear of repercussion is always over their head. It's always looming. So we don't want to encourage names on there. We can keep it anonymous. What we want to encourage is 100% participation, because I'd rather get everybody on there putting in their real and honest feelings with no repercussions, so we can pull out the survey and say, okay, this is what 20% of the company said, 30%, 50%, so forth and so on. I've seen it before, and I was like, "Oh, hell no!" Nah. Yeah, see, exactly, right? You've seen it before. I'm gonna, you know, if there's a question on the survey, it's like, "How would you rate this person's leadership?" I've seen that before too. I'm like, "Nah, man, nah, I'm not putting that on nothing. I'm not putting my name on nothing." All right, we got another question here. Do they mention exit interviews? I feel like that would be a more honest feedback from the employees on a negative aspect, more likely. Absolutely. So that's a great point. That's another beautiful way to survey the audience as they're leaving. I'm trying to think of the way to phrase this here. Always consider the fact that, why are they leaving? If they're leaving because they're disgruntled, right, then more than likely the exit interview, or if you have them fill out something on the way out the door, more than likely it's going to be something negative or in the realm of being disgruntled because of something in the company, right? And that's fine. That's fine. But we always have to remember, as we're bringing in people to see if they're a good fit for our team and our culture, not everybody's going to fit. Not everybody is going to really be a good fit. So if they're leaving and we know they're not a good fit, then we can read their review or whatever they're saying is, right, of what happened, but we have to take it with a grain of salt, because if they weren't a good cultural fit, but everybody else, or 90% of the others that are a good cultural fit, say, hey, this is a good thing, then we have to take it with a grain of salt. All right. So the reason I like no, you're 100% right and 100% accurate. That can be another way to rate satisfaction rate. Go for it. I was only going to say the reason I enjoy employee satisfaction surveys is because they're going to be intermittent throughout the months, or the quarterly, whatever the case is. But now you're getting a look from people's perspectives that are currently in the company, not just leaving the company. And Ruben says, always a learning moment, even disgruntled. How do they get through? How long do we allow them to create a substandard for the company? That's a great question. That's a great question. Knowing when to hire and when to fire is another soft skill set. All right. All right. So we covered a lot on the managerial side. Moving on to the next qualitative side here, it's going to be your ability to do market analysis. I know that sounds kind of scary because we keep throwing in the word analysis here. And market analysis does not have to be the full-on analysis that you would expect from a CMO, a chief marketing officer, or whatever the case is. Excuse me, sorry. By market analysis, we're essentially trying to figure out, is our product or service actually desired and enjoyed, right? And are we really in tune with whoever our client avatar is? And if you guys aren't familiar with client avatar, that's just saying our ideal client, right? And so that can be an age frame, right? A certain demographic of age between this and this, a certain disposable income level of this. Maybe they're married, maybe they're single mothers, maybe they're, men or women. It doesn't matter. It's whatever our client avatar is, right? And so, for example, for a long time, Lululemon, for an example, their client avatar was women for the most part for a long time. And then they opened up their brand to men as well, right? But that's the idea behind a client avatar. So how do we know that we're actually in tune with what we think our client avatar is? That's the type of market analysis that we're referring to here. So what are some ideas and resources you can do? Same thing like you did with employee satisfaction surveys. We want to do client surveys. Okay. And so a perfect example of this, oftentimes when you buy something from Amazon, I'm pretty sure everybody here, matter of fact, if you have not bought something from Amazon, put that in the chat so we can publicly shame you. Now I'm playing. But seriously, though, let me know if you haven't bought from Amazon. I honestly believe everybody in this chat, and about 99% of America at this point, has probably bought something from Amazon. When you do that, oftentimes after you purchase, they're going to say, leave a review, right? Or Audible. And if you guys have an Audible subscription, after you listen all the way through to the video, it's going to ask you for a review. These can be things that we implement in our business immediately. Most brokers that we work with, they know to ask for their review at the end of the transaction. Ruben here, he says, ask for referrals on every win, right? And a referral is essentially a review, right? So if something good happens during the transaction, that's a win. Ask for a referral. Then people will not give you a referral or refer you out to somebody that they love and trust if they don't think that you're doing a good job. Okay. So think of reviews or referrals as reviews as well. So we want to ask for our client reviews as much or as in many different ways as possible. I don't want to say as much as possible because I don't want to give you the idea of every time you speak to your client, you're asking for a review. That's not the case, right? But for example, you can do it at the end of a transaction, ask for a legitimate review, maybe a video testimonial. And maybe 6 months after, you make sure that you are following up with them every month or something. If you're not following up with them after 6 months, don't send them a review after 6 months because they're going to be like, man, I don't remember you, right? If you're actually following up with them, then you can send them a review there. But there's going to be multiple opportunities to send reviews. Christmas letters, right? Maybe say you have your client satisfaction program set up or your client appreciation program set up, and you want to send out one of those holiday gifts. So you send out one of those holiday gifts, and in that gift or in that letter, you say, hey, we loved working with you. Thank you so much for trusting us. If you feel so inclined, or however you want to word it, would you mind leaving us a review here with your thoughts? And that'd be a great way because you're associating a positive gesture, the gift, with the review, right? So those are different examples to ask for client reviews. Another thing that you can do, and this is typically practiced in larger companies, but you can facilitate this yourself as well, is through focus groups. All right. Now, a focus group is essentially a selection of people that are somewhat within your client avatar, right? Somewhat within your demographic of who you're marketing to. And then you're going to test them right there. Now, that focus group, you can test a product out right there in hand. They can test the product or look at the design, and then they can provide feedback in real time and just get a myriad of responses that way. That can be fine. For us, we can do it simply through facilitating that focus group, right? We can ask some of our premier clients or some of our recent clients to, hey guys, I just want to bring you all together, and I want to basically operate a focus group. And there's going to be a few things that I'm asking. Are you open to it? Right? Get them in the building, maybe 5 to 10 of them. It doesn't have to be an enormous amount. The point is you're trying to get authentic feedback, right? And you want to get it from many different points of view as possible. Okay. And so when you're doing that, another good practice was, if you are the product or the service owner, the business owner, maybe you're not in the room. Maybe you're not in the room for the same reason that we talked about the employee satisfaction survey having a name. You may not, there may be some sort of repercussion fear with that, right? So we don't want to do that. Okay. All right. So that's your market analysis in a nutshell. Okay. There's are much deeper sides of that. We're not going to get into that. I want to make sure as business owners, you understand how to evaluate your market to make sure that you're going in the right direction and you're adapting when you need to. All right. Now, the next one is industry cycles. Some would argue that this can be quantified. I would argue that it can't. The reason being is because although we can collect a buttload of historical data, there is no way for us to 100% accurately predict the future. So when we look at industry cycles, we can say, all right, 2008, there was an issue and we faced a big industry decline in the housing business, right? We can look at it that way. 2008, 2009, we were kind of screwed. But if you look at investors, there was a lot of investors who bought during 2008 and 2009, and they made a fortune, right? So understanding your specific industry, are you on the investing side? Are you on the broker side? And many other, industries out there. What side of the fence or what side of the industry are you on? And when we're talking about industry cycles, we're specifically talking about the hot and cold seasons of the market, because it's if nobody else in the world can predict when a real downfall is coming, like another crash or depression or whatever the case is, I'm not expecting you to. That's not your job, and that would take way too much of your time. But if we can at least study our industry enough to say, hey, year over year, we're going to make more sales during the months of May through September, as an example, and we're going to make less sales from October through April. All right. And then we can get an idea of how much less or how much more, because we need to be sure that we're looking at the income that's flowing in, right? So if we say, yeah, we got 5 more sales during these months, great. But what does that mean per dollar? What does that actually mean for the company? And the slow months, can we still afford salaries? Can we still afford all the overhead associated with the company? Can we still generate a profit? Right? If not, then we got to go back to that quantitative aspect and start looking more at our accounting and our finances and see where we may be able to potentially cut costs or streamline efficiency by replacing certain things. Okay. So by qualitative, primarily what I'm referring to here is the industry cycles year over year, not necessarily over the span of 10 years. Okay. The next qualitative is legal. Legal. What do we mean by legal? Legal. Protect yourself. Protect your assets. Protect your clients. You can't quantify legal because oftentimes it's pieces of paper. And when you go to litigation, then it's up to the interpretation of the attorney and the jury or the judge, right? So there's no cold hard facts. There's interpretation of the law. That's a scary thing when you think about it. That's a scary thing when you think about it. However, you can set up many additional layers of protection to make it very difficult to skew that interpretation one way or the other. All right. So we're going to put this under the qualitative because the quality of your asset protection can determine if you lose it all or if you can preserve it over time or even grow it over time. Okay. So the ability to protect your company and clients, what that means is we're going to look for the best entity structuring, the best contracts, right? The best employee agreements, the best non-disclosure agreements, all of these things. And then we're going to try to put them into a standard operating procedure that makes sure that we're covering ourselves every step of the way. So this is a little bit more of a deep analysis of what you have. And for entity structuring, we're looking for two things. Yes, we're looking for asset protection, right? I'll give you a perfect example. You own your company that was generated. I'm in North Carolina, so let's use North Carolina. The company where I operate out of is in North Carolina, so therefore it's a North Carolina entity. I live here. The income comes here. That's how we're taxed on North Carolina. However, I want to add an additional layer of protection. So this LLC is actually going to be owned by another LLC up top, right? And that LLC is going to be in a place where there's a thicker corporate veil or more protection in a state like Wyoming, Nevada, wherever, right? Excuse me. Wyoming and Nevada are recommended for smaller companies, and then you'll start to see Maryland and some other places for slightly larger companies. Either way, though, that holding company is up there. Now that means, I can move all the stuff out of the way, move it out of the LLC, move it into my personal. And so if they attacked this LLC here in North Carolina and they won for whatever reason, and this company in North Carolina doesn't have enough assets to be liquidated to pay off that settlement, well, now they have to go up to the next holding company and they got to try to sue that one. But because it's in a different state, it operates under different procedures, that corporate veil is much, much stronger, right? And then it goes from there. So that's asset protection. The other thing we want the entity to do is give us the best tax structure, okay? So for example, an LLC is the entity, but it can be taxed in many different ways. So the LLC, if it's just taxed as a pass-through entity, that means whatever money was earned or lost just gets passed on to our personal taxes. Okay. So if we made 50,000 and the company made a profit of 50,000, then our overall tax obligation will be based on $100,000. That's what that means. All right. Then we can also choose different structures. Maybe like we're going to file it as an S corp. And so an S corp, you're going to have a business filing separate from the individual. All right. And so we can reduce our business tax obligation by taking out compensations and salary and all these other things. And then we'll be taxed on our salary as an individual, and the company will be taxed independently. Right. Neither is right or wrong, but you want to know what is the best for your business model, your structure, and things of that nature. So we want to make sure that the legal stuff is set up. Oh, resources. I think I missed some resources. Well, we gave the market analysis. I think if you want for industry, I'll go back to that one here in a second. But resources for legal is asset attorney. That's it. Go to an attorney, and I would argue. I would make a strong argument to incorporate a CPA, because the CPA is the one that's going to be giving you the tax information. Hey, because of how you're structured, this is the best way to structure for taxes. Okay, so the CPA will be a good set there. So you may want to marry the two, the CPA and the asset attorney. Okay. All right, guys. And we're moving on to the final one, on a qualitative approach here, which is vendor relations. This is something that many of us may already do, but we don't necessarily put a focus on it. So vendor relations is working with all the third-party vendors that you use, these other companies that help you complete your product or your service. Everybody who is in real estate, everybody who is in business will need a funding source at some point in time. That could be a banker, that could be a commercial loan broker, whatever the case is. Oftentimes we forget how important they are to us, and we don't really show them appreciation. right? So these vendor relationships, we got to ask ourselves, do the vendors actually like us? Do they actually like us? Or do they just work with us because we bring money to them, right? Will they be, if they like us, if they do like us, then what degree, right? Are they willing to bend the rules a little bit to make sure that we get what we need? Are they saying, hey, look, man, usually this process takes about 3 or 4 days, but if you get it into me today, I'll go ahead and push it to the front of the line so we can go ahead and get it processed. That's a vendor relationship that all of us should desire to have, right? Because that could be the make or break between a profit and a loss, or it could be the difference between, a 10% increase in our profit or whatever the case may be, right? So we have to ask ourselves that. So what I want you to do, this is a practical exercise. What I want you to do is I want you to list down every vendor that is crucial to your business model. For all of the real estate professionals out there, again, I don't care if you're an investor, if you're a broker, if you're private equity, it doesn't matter. You're most likely always going to need an attorney. That I would say is number one, honestly. And then you're always going to need a funding source. Always. That can be a banker, a lender, or whatever the case is. So for those two, you want to make sure that you're showing your appreciation as well to strengthen that relationship. This can be in the form of gifts, right? This can be in the form of gifts. Hey, here's a Christmas card, man. Just wanted to show you my love. We have to be careful in some industries. Giving gifts, put it like this: giving gifts for favors are not allowed. It's not allowed in the brokerage community when we're looking at the association of realtors. It's not allowed in the lending community either, or in the banking industry. It's not allowed. So if you say, hey, we just closed this deal, thank you for bringing me this client, or a reward for bringing me this client, that's not allowed, right? A thank you, maybe it's not thank you for bringing me this client, it's a thank you for trusting me. Right. So just be careful with how you're displaying it and understand your specific regulations. Put it like that. Every state may be different. Every industry may be different. Just understand what your limitations are and your ability to give gifts to third-party vendors that you partner with. Okay. So giving gifts is a great way. And also just meeting in person, just doing an outing, right? Take them to dinner, right? Just have fun, just shooting the stuff, right? Maybe take each one of the vendors out. Maybe take your attorney and your funding source and your whatever is out there, right? Your person who delivers the parts that you then manufacture to sell your product. Take them out, get to know them, right? And have them meet each other, and just show that you're more than just somebody who's signing paper behind a screen. You want to establish that relationship. Now, the concept is going to be when they scratch your back, you'll be scratching their back as well, right? And I don't mean that in a monetary or like a sketchy way. What I'm saying is the relationship should be so good that it's saying like, look, man, I understand. Hey, vendor, I understand you're busy, man. I understand you're super swamped. Look, this is not going to change our relationship, but I need this now. So do you have another lender that that you can point me to just for this transaction? I know you're swamped, man. You're still my guy, but I need to get this done now. Right. And I'm still here, guys. I'm still here. And so with that being the case, the lender, if the relationship is good, the lender's going to say, yeah, absolutely, man. Go to this person right here. He'll get it done. I like him. He's good. He's concrete. And we'll deal with the next deal. That's a healthy relationship. You want to have that established. Okay. And again, that's another qualitative thing that truly can't be measured, but it is so important in your success. Yeah. And then, yeah, even Ruben says, meet these people. Don't just text or call them, break bread, and actually spend some time with them, guys. Spend some time with them. All right. So just a quick recap. And then I want you guys to fill the chat with questions. We got about 5 minutes left before we're going to cut off. So go ahead and fill the chat with questions. I'm going to do the quick recap here. So remember, there's two primary subjects that business owners need to study. And this is all business owners. It's your quantitative subjects and your qualitative subjects. Now, underneath the quantitative, these are tangible things that can be directly measured by performance, numbers, percentages, things of that nature. And I like to just ball them all up to say this is business math. All right, it's business math. It's going to be your accounting for past performance and for tax savings, your finance for future performance and analysis, your economics, micro for your company and industry, macro for the overall world influence, and your statistics for your ability to collect and interpret data. All right, those are the quantitative. Now, for the qualitative, these are the intangibles that can't directly be measured, but they play an extremely important role in your company. And this is going to be your managerial skills, to include your leadership and your employee satisfaction, your market analysis, being able to identify your product and service and how well that they fit with your client avatar, right? And so that can be done through focus groups and client surveys. Your industry cycles, basically the hot and cold season year over year. When are you going to be making more money? When are you going to be making less money? And how do we adjust throughout the year to make sure that we're still reaching our profit margins or whatever other performance metric that we have? All right. Legal. How well are we protected and how well are we protecting our clients? This comes in all the documents, including the entity structuring itself. All right. And then vendor relations. This is how do we make sure that the people that we're working with like us, we like them, and we're working together in the most efficient way as possible. And a boom, mic drop. All right. Any questions, guys? I want to leave it open a little bit longer for questions. If there are no questions, we've recapped it. We've given you all the resources here. This replay will be available. I know this is going to be on Ruben's YouTube channel. It's also going to be on my YouTube channel as well. It'll be on my LinkedIn profile. It will be on all of our Facebook profiles, all of that good stuff. So you guys can go back and rewatch it. You guys can share it with anybody that you think that this may be important to, right? Maybe a fellow entrepreneur, business owner. And quite honestly, guys, this was from the direction of a business owner, but anybody that is studying business, right? If you plan to go into the corporate world, anything of that nature, you're going to want to know these different areas fairly well, right? So you can actually provide value in a conversation, or at least just understand what they're talking about when they're having those conversations. Okay, here goes a question here. What KPI, which is key performance indicator, or activity in any specific area you mentioned that you implement into your business that has the biggest impact on your business growth? Ooh, I love it. All right. So the two KPIs that I measure, and I'm just going to stick with these two. I actually measure a ton. So, all right. See, now you got me excited. Sorry. So one of the KPIs that I would always consider measuring is any marketing efforts, any marketing efforts. Track exactly how much you spent. You want to know how many people it got in front of. And so typically you can measure this through something called impressions. If you're doing it on YouTube or some other like Google Analytics, you can track impressions. Then you can track the people that have actually clicked on or viewed from there, right? So we have a conversion rate from the people that it reached to the people that actually acted on it. And then from there, you can track to how many people that you actually got under contract or, to sell your product or the first sales meeting. And then you can track the sales of the product, actual delivery of the product, and the receipt of the money. And when you do that, now what's so powerful about that is because let's say you spent $1,000 on it, on the marketing, but you ended up earning $10,000. Well, now we can see a very clear picture. For every $1,000 I spend, theoretically, I can make $10,000, right? And we have the data to back it up. On the other hand, if you spent $10,000 on the marketing and then you only made $10,000, the effort was net zero, right? In fact, I would argue that it was in the negative because of the time and the effort that went behind that. The $10,000 that was spent on marketing could have been applied somewhere else that we have done the research and we know that there will be a direct impact of growth. So marketing, analyzing the marketing allows you to slash the stuff that's not working very quickly and then double down on the things that do work. And that will be exponentially impact your growth over time just by simply doing that, right? And most of my clients, that's where we start. We go through expense analysis and then we go through market analysis or the marketing efforts analysis, and we can find growth patterns immediately. The next thing I like to look at is gross profit versus net profit. And so gross profit is going to be your revenue that comes in minus your cost of goods sold, right? And so, for example, let's go back to a manufacturing plant. Let's say you made furniture for a living. Okay. You sold the furniture. So your goods that you sold was the furniture. However, you had to buy the lumber for it. You had to pay for the labor for it and the storage for it, for example. Well, those three expenses are required for you to create the product and then sell it. So those three expenses would be cost of goods sold. So if we can see immediately, for example, here's our top line revenue and our cost of goods, or our gross profit was, sorry, margin, gross profit margin and net profit margin, right? The gross profit margin was 50%, for example. That means our cost of goods sold just ate up 50% of our income or our revenue. That's not really all that healthy, right? We want to find ways where we can streamline that and shrink that down. Ideally, we want that gross profit margin 80% and above. Like that shows that we're operating very slim, right? Or very efficiently, put it that way. And we're actually able to keep more of our money before we take out expenses, which leads to your net income. And so therefore, if we see like gross profit margin, let's just say it's 80%, for example, but then our net profit margin is 5%. Well, then now we know that we need to really hone in on the expenses and where can we streamline. So just understanding those profit margins will quickly identify areas of potential improvement. I don't want to call them weaknesses, but potential improvement, right? And so gross profit margin baseline about 80% would be a great marker to shoot for. Obviously, the higher the better. And the net profit margin around 20%, 25% would be a good marker to shoot for. On understanding, like, the higher the better. And depending on how big your company is, those or what industry you're in, or product or service, those will change as well. We moved our marketing budget somewhere else after looking for the numbers for much higher value. Yep, exactly. So yeah, once you understand those numbers too, and I'm sorry, Facebook user, you just come up as Facebook user, so I can't call you out by your name. I apologize. But when we're using those, when we identify those numbers, from there, we can then reconstruct our business operational budget, just like Ruben's talking about there. But by having that budget, that's where it gets fun, man. I know budget doesn't sound fun to many people, but when we know for a fact we can only spend hypothetically $10,000 on operational expenses this month, and we brought in $50,000 of revenue, well, then we're only going to move over $10,000 to operational expenses. That other $40,000, we get to move into different buckets, right? To include owner compensation, profit account, reserve account. Some of these accounts that I just mentioned, many entrepreneurs do not have. They don't. What they'll do is they'll put all the money in one account, pay for all of the expenses, and then they may take a little money out, and then they dwindle it down to maybe $5,000 for the month, and they'll wait for next month's income to come in. That's a very dangerous game to play, right? So those are some of the KPIs that I look at. That's long story, long answer to that. I apologize. All right, guys. Well, hey, look, it's been about an hour. I really appreciate all of the involvement here, all the questions. If you guys have more questions, I would encourage you to come to my YouTube channel. It's Michael S. Glaspie. If you guys are watching it here on YouTube, you're already there. And if you guys have not been, you guys can go and search me out there, where I make a ton of content about different things from business owners' perspective, how to increase operational proficiency, how to cut expenses, how to hire right, all the above, right? So you guys can check me out there. Facebook user, say it's an awesome breakdown. Really appreciate it, man. I'm going to let you guys go back and enjoy the rest of the day, and I hope that you crush it. All right. See you guys next time.